Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, we are back into another exciting week. There has been more ETF rumors heating up the last few days. We have also just had, what I would say is definitely a healthy dispersion in the market, and we're solidly into November, which is crazy. Only a few more weeks until the end of the year. So let's dive right in. I've got some fun stuff to talk with you about this week. So, oops, that one's too early. All right, cool. So we'll start by talking about Arbitrum, but I guess you got a quick review of what else we have to cover. All right. So on Monday, the Arbitrum community voted to implement a trial period program that is going to allocate 1% of the total token supply to staking over the next 12 months. So to date, the this is a layer 2 project on Ethereum. They gained a lot of notoriety early in the year for being, a super big DeFi hub, a lot of activity. But so far their tokens really only been used for governance. And the new program is going to be creating like a single-sided staking option for token holders, which should lead to, significant yields denominated in ETH. But at the same time, all it's really doing is making users agree to lock up their ARB. This does this is going to come from the treasury, this staking amount. So there's no inflation, and it's kind of just a trial run. So they'll see how long it goes for. And this is, pretty positive, hopefully in the long run for them. Like as I said, I think the market is turning away from a lot of governance only tokens. This does also come after a highly publicized grants program distributed about 74 million ARB tokens to community projects built on the L2. With this, Arbitrum is up 5.7% for the week. All right. Next, we're going to talk about APE or ApeCoin. So the Solana-based NFT market, Magic Eden, and Bored Ape Club creator Yuga Labs announced a partnership this week to create an Ethereum-based marketplace that enforces creator royalties. So the NFT royalty debate has been raging for quite some time, with many NFT marketplaces opting to drop creator royalties enforcement and offering zero-fee trading in a race to the bottom. So notably, Blur only enforces a 0.5% creator royalty on new collections and charges zero trading fees. And then OpenSea recently got rid of their mandatory 0.5 creator fee royalty fee in favor of a 0.5% trading fee. So while this might set a good precedent for the market to move back to royalties, there's still a lot of other venues that do not enforce royalties or make them optional for the end user. We also found it was super interesting that Yuga Labs is choosing to not create their own marketplace, but are partnering with another company. A lot of folks really anticipated that Yuga Labs would eventually create their own marketplace for the Bored Ape ecosystem, especially after raising $450 million in funding last year. With this, the Ape token is up about 8.3% for the week. All right, AAVE. So over the weekend, decentralized lending protocol AAVE discovered a potential vulnerability in a select number of their V2 contracts on Ethereum and its V3 contracts on Polygon, Arbitrum, and Optimism. So the protocol ended up pausing there a couple different lend-borrow markets on these chains while the issues were investigated. And then also because the vulnerability could impact other projects that had forked AAVE, they decided not to actually reveal what the specific vulnerability was, just that it related to stable markets, or basically stablecoin lending pools. Radiant and Spark, two of the largest forks of AAVE, also announced that they're not impacted by the vulnerability. Definitely good. Today, AAVE passed a vote to pause all stable borrowing and issue a patch for the vulnerability, which should be expected in the next several days. So even with this, kind of bit of a hiccup, everything is all fine on AAVE. Good to see this get patched quickly, and everybody kind of communicate quickly that there were issues, that they're being solved. And the token is up 9.2% for the week. All right, last up we have the graph. So, the Graph, a Web3 infrastructure project for developers, announced their new era roadmap yesterday, which includes the release of new blockchain data services. So, for people who aren't familiar, the Graph kind of pitches themselves as like the Google of Web3. They're definitely much more of a developer tool, though. It's not like something that I'll be honest, I am not a developer. I'm not going to go in there and use it myself. But developers, when they're constructing smart contracts, it basically kind of commoditizes some of the data that would otherwise be inaccessible for them. So the Graph, had made a bunch of different announcements. The big one is that they released their new era roadmap yesterday. I wonder if that's a play on a Taylor Swift tour. And they included the release of new blockchain data services. So these services are going to include, the biggest thing is AI assisted querying. So everyone knows now that AI is like a big buzzword, especially in crypto. But it actually makes a lot of sense in the context of something like the Graph, which is tons and tons of data. So having kind of any type of AI piece that can kind of assist with sifting through some of that is really helpful. There are also going to be some other services, including verifiable data and improved tooling. The Graph's conference, Datapalooza, is also on track to start next week, promising more potential announcements from the project. To give you guys context, the Graph is up almost 200% for the year, and it is up 18% just this week. All right, well, that's all I got for you guys. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.